Hello, everyone, and welcome to another stream. I hope you had a great weekend, guys, and I hope you're ready for NVIDIA week because, of course, that's the one we're in right now. Wednesday after the close, most people will be discussing everything about NVIDIA, and rightfully so because it will be the one moving the markets. And we know that even with all the Fed chairmen coming out, and boy, oh boy, there are a lot of them discussing everything from, let's say, tight conditions not being so tight, etc., to everything else. We know that really it matters about this one stock. I hope everybody is ready for that. And of course, if you are trading Nvidia, do expect movements of pretty large proportions, plus minus 8 to 9%, maybe even 10% expected from the options market. So this means it's going to be a big deal. And yeah, hundreds of billions of dollars will be moving. Let's give a shout out to the people that were here earliest today. And we had Kevin TX DB, Mr. Redbeard, welcome, welcome. Big Silver Hot Dog, Clace, Bob S, Michael, Dono with many, many sheep, it looks like. And then we've got Jan and Inf as well. Thank you also, Inf. You would post pretty much on every video, so that's appreciated. All right, so guys, we know it's NVIDIA. We'll go through stocks, commodities, and cryptos as per usual today. We'll cover kind of everything about the markets. Obviously, it was a metals market last week, which was pretty exciting. And we saw some huge moves. These are the big earners this week. Most people will be looking at this morning, which is going to be Pan W. And then we'll be looking, it says after close here. I'm not sure where it is. Maybe it is after the close. And then we have NVIDIA after the close on Wednesday. Snowflake as well. Some of you guys will be interested in that one. All right, well, let's jump into the charts to get started. And of course, we'll talk about NVIDIA to get started with. This particular stock has been moving on up, and it's mostly an options play. So around $950, we have a options call wall. And then at 1,000, we have the most struck level. So basically this level here, if the market likes what it sees, it's going to gravitate towards 1,000. And that would be where I expect it to move to. And if it doesn't like what it sees, it's obviously going to move down to this 888 and possibly even pressure these levels here, including 850. So every 50 is pretty important, but I would say that 888 is also pretty important because it's been where the demand has kind of been forcing itself through. Another thing that I would generally do here is I would understand that this level is also the most traded zone. So basically, if we think about all of the transactions that have gone through, most of them have been transacting at this point. So we know that above this point, bullish, below this point, starting to get bearish. So I think that's kind of important to factor in as well. There we go. All right. So what's it all been about? Well, of course, it has been mostly metals that have been kicking some ass. Gold, one of our favorites, 2417, new all-time high for gold. Pulled back a little bit just before actually getting a small red stop sign. So maybe it's had a little bit of exhaustion, but still a very, very nice move. And then, of course, the other one, which we knew would be playing catch up, was silver. And silver's done much better, hitting 31. And this level here is now the highest that we've seen since 2012 levels. So basically, I liken it to silver could be on for a pretty epic run. If you know anything about silver history, you'd know that over here was kind of reached in the 70s, was reached again in 2011. And I think we can do $50 an ounce again. So it's going to be pretty amazing. So yeah, it's been a massive move. It's an inverse head and shoulders as well. If you look, left shoulder, head, right shoulder, massive move, huge kind of overall market action. And I think we've got to say that, it's going to go pretty big. Kevin says silver 50. Yeah, well, if I'm going to have my gold sitting at 3,000 over the next 12 to 18 months, then I've got to have silver at around $50 an ounce. Yeah. Yeah. So you've got to kind of, they would have to go hand in hand. Remember, it's the silver gold ratio or gold silver ratio that we've been trading quite a lot of on the show, discussing it all together, everything like that. Also, welcome to the almost 400 people already joining us. If you can give it a thumbs up to the show, if you enjoy this type of content, then let me know. Because of course we're only here thanks to each and every one of you supporting the channel, commenting, and all of that good stuff. Now, I want to know, chat. I want to know this, everyone. What is your favorite stock in the market right now? Market closes tomorrow, closes for 2 years. Which stock would you most likely want to hold for that 2-year period? Give it to me right now. Let's read out some of the best responses and find out what you have the most amount of faith in. Remember, the market's closed. You can't trade for 2 years. So which stock would you pick as your number one? Let's see and figure out what everyone is kind of expecting here. We'll go through some other markets. We'll just quickly do crypto because I think a lot of people will ask. 67,000 is getting pressured. So that basically means this level is still under a lot of pressure. We're finding that resistance. We know that it's coiling around here. So if it now breaks out to the upside, there's an excellent chance it'll be going towards 72,000. There's a fairly fast move from here to here, just like this was a very fast move from here to here. What we call equilibrium point to equilibrium point. So do I know it's breaking through? Well, I'd guess that it's more bullish than bearish because it's an easy guess for crypto traders. But yeah, look at this as a coil. And if the market can break through this point, I would say it goes towards 72 fairly quickly. All right, let's read some of your best responses here. So let's see what somebody actually said. Neo. Wow, that's amazing. So we've got some Chinese stocks here. We've got 700, which is Tencent. We've got Tesla a few times. We've got people saying Meta, GDX, interesting pick. So GDX, gold stocks. Barber, S&P 500, more of an index than an individual stock, but fair enough. And then we've got SMCI as well coming in a few times. AMD, Walmart, Microsoft, Tiger, Intel. Interesting. So yeah, Luke says here, I could put my entire life savings in Microsoft and sleep easy at night no matter what. Fair enough. Well, they do have a good moat, Luke, which is nice, which is why they've always been my favorite stock in the market. Though, as I've said recently, that's starting to turn because I do see some others. I'm surprised no one's putting Google in here. No one's putting in Apple, the old perennial favorite. No one likes Apple anymore. No Amazon. No anything else. Now, someone does bring up Moro here, brings up an interesting one, which is Hood. We will be taking a look at that stock a little bit later on because Hood does have some interesting characteristics. So anyway, let's just quickly dial down here on Bitcoin. We'll go to the 2-hour chart. You can see the coil that's been appearing, the highs, the lows, and of course the open and the close in between. And yeah, I think just in general, this is a very, very interesting overall kind of level from the perspective of, it is the key resistance. We are coiling and you're looking for that breakout. So a nice strong closure, daily, 4-hour, 8-hour, like, a decent chart breakout. Still making a series of higher highs and higher lows. So it's in the upward trend. All right, let's jump on over. We've already talked about gold and silver. We kind of feel like they're coming off their top at the moment, but I'm still, overall bullish on them. What that means is that, this is a very extended move. Gold and silver do have a tendency to kind of fall back. 2380 will be an interesting point for gold this week because you can see that's where it came off only last week. So expect this to be still maybe a little bit of a brutal sell initially because, it ran up so quickly. Everyone's been talking about it. Like everyone's been mentioning copper, gold, silver. I'm being flogged it by everything you could ever think of. And as I mentioned last week, to me, anyway, with copper, although I'm bullish on it, if you come back in 6 months, 12 months, etc., you'll notice that it started to show signs of weakness to me. And maybe this is a blow off. So it might start to consolidate for a little while. What do you guys think, though? Do you think it's going to consolidate? Do you think to the moon or some form of consolidation across all of these? Yeah, some form of consolidation, I feel like could be in order. Now, the other one is US oil. So US oil hit the 20 moving average, which we know has been an exceptionally good, this is the daily 20 moving average, exceptionally good support on the way up, a good resistance on the way down. And we find ourselves at an incredibly tough point. We know that we like oil at this price because, of course, we saw some good signs last week that were showing, off our bull zone, off our, of course, prepared and very, very good bull zone. And so far, that's been proven correct. But what we would like to see is this daily 20 get taken out. So I'd like to get a nice green candle through this to really show that the market is scaling or positioning in on bullish oil. And that should therefore take us back to something like an $84 a barrel, 83.50, 84 a barrel. So yeah, this is a contentious one. I think the energy, although I'm a big fan of the US oil current area. I do think the energy position in a political year like it is, on one hand, you've got, powerful forces that don't want to, make more oil barrels basically. And on the other hand, you've got powerful forces trying to keep oil low. So it is a politically charged trade, this one. And I would say that is a huge component to why oil might be a little bit less interesting to the metals, rare earths, those types of things throughout the rest of the year. US dollar, you'll have to keep an eye on this one. We obviously made some amazing trades on this recently in terms of our calls, our levels, etc. The first one was the weakness into the 104 area. Well done, everyone. Then we had, of course, the strength. Now, we thought that there could be a little bit more strength, and I still think it's possible, maybe up to the 105 area, and then we resume weakness again. But we did see this coming out of the Friday trade, which was a rejection, what we call a shooting star candle. So this is a very interesting candle, because if it had follow through from it, which it hasn't, so you can see no new low, which is very important. New low, I think that's going to get a lot of day traders involved in the short, but no new low yet. Then if we do end up closing above this area, that can change everything. So be very careful here. We already know we hit target one. We know that we kind of expected this. We got something a little bit different. So now we've got to say, okay, well, if you really want to be a bear on this trade, you probably want a new low underneath that zone. And if it does end up closing above here, I think I'd start to question a lot of things about the dollar. So that will be, a trade that's certainly worth paying attention to. All right. So read the falling wedge correctly on natty gas and sold too soon. Abundance mindset says there's always another trade. This is from Credit Union, and sometime tapping out too soon hurts the soul. Don't look at it again, Mr. Credit Union. Why are you even looking at something? It's kind of like let's say you bought a house in the street and you went, damn, this house is amazing. I love this house. So good. And you paid a certain amount. Say you paid $1 million for it. And you thought, wow, I got a great deal. That's fantastic. Then 2 months later, another house in the same street, pretty similar, comes up and someone nabs it for $920,000. And you're thinking, oh, this is the worst. Like, I wish I just waited that little bit longer and I could have got the house at $920,000. Number one, you probably wouldn't have got it because you would have been competing with them, therefore pushing the price up to maybe even $1 million again. And number two, you got to look at the bigger picture. So the bigger picture is, well, if you sit in that house and you love that house so much, why does it matter if one sold for 920? Because in 10 years' time, that house is probably going to have doubled or whatever it might have done. So realistically, you can't go back and look at things in hindsight. You just have to keep pushing forward. And that's why I always talk about the abundance mindset. There's always another opportunity on the horizon. And sometimes you miss something that can be life-changing, but very infrequently does that happen. And the thing is, you'll say, oh, I knew I could have done that. But, realistically, if you knew it, then you should have done it. So you've got to ask yourself, why didn't you do that? Why didn't you pull that trigger? Did you not have the evidence? And then adjust that in your own mindset so that next time you can take that opportunity. And you've also got to ask yourself the question is, were you taking too much risk? Some people, I think most amateur traders, myself, because I've done this when I first started, you'll be thinking about, let's say, loading into a crypto coin. Let's say it's Dogecoin, a joke, honestly. And then you buy Dogecoin, you put your life savings in it. You put 40 grand in it and it went up to $1 million. Let's just say that could have happened. That was your life savings. You worked at McDonald's, cutting those fries, heating up those questionable pieces of meat in that little vat, the vat. Anyone that works in McDonald's, that disgusting vat, putting the salt in the fries, getting spat on by customers, and you save that 40 grand and then you go put it on Dogecoins. And yeah, you could have been a millionaire, but you also would have taken an extreme risk. What if you accidentally did that on GameStop last week and got blitzed? You know what I mean? Anyway, that's a rant. I don't know if you guys like the rants, but I have to have a rant about it. Tesla is dead, according to Hoz. It's way overvalued as a car company, and I really don't think Elon can pull off the AI and robots thing. I think the main problem there from Tesla's perspective is that will Elon actually be pushing the AI, considering he's running a bunch of other AI companies? Anyway, dollar index. Speaking of Tesla, let's jump on over to that before we do indices. Obviously, I am a little bit of a fan of the price action last week. So if anyone was looking around here, in particular, is 171.82. That's actually an incredibly replicable buy trade. And if we get it through 180 this week, I think that's a decent catalyst towards calls. So we know already that there's a decent amount of calls that are sitting around this strike. In fact, I can show you guys because I believe I have it here. What's this? Oh, no, that's a piece of crap. 1 second. No, that's a piece of crap. There we go. So now the one was Brent. That was okay. All right. So this is Tesla. So you can see here we've got a lot of 180 calls. So in a very important level for Tesla. So basically, we can see here that 180 is the strike of bulls. And because it turns into a positive gamma situation around there, where you can see here it goes super positive gamma, that's going to start to push the narrative. So if the market starts to momentum through 180, it could create another squeeze. And I think that's the key level that you want to be looking at here this week on Tesla. And you'll notice we have that high. So if we put a high there, the 180 is the key. The 180 is the key. Human Hilton says this is the perfect week to tank the market. Few percentage of people are too positives. Yeah. So if you've looked at sentiment surveys recently, 23% of people are bearish over the next 6 months. Bunch of neutrality and that kind of high 40 pluses in terms of the bull. So clearly, yes, there are a lot of people that are bullish on markets, and you could argue that they are rightfully so. By the way, if Tesla gets through this area, I would expect it to strike into go for that kind of 200 strike. So yeah, interesting, decent price action on the small time frame. You can kind of see here it's finding buyers. A little bit of a rejection on the Friday trade, which means that, of course, if we manage to get through that, that's again pushing that pressure point. US 500 now. So people are going to have a lot of opinions here, and I want to know your opinion. Bullish or bearish, guys, this week? Let us know in the chat. Let's go. Bullish or bearish this week? While we wait for your opinions, overexposed to Nvidia and AI crypto coins, so I won't be sleeping until Wednesday. Ooh, $1,000 and I can retire my entire family. $800 and I'm only retiring. They will be cutting fries if those jobs still exist. Well, exactly. They'll be cutting. You're mean, bro. They'll be cutting those fries. I wish you all the best. I wish you all the best. RF Tax says, back to the normal programming. Love the Monday rants. Yeah, sometimes I get into the rants, but it is true. Yeah, you got to have that good mindset. And I think it's incredibly important. Mikey Meza says, the Iran's president dying could be the start of the Black Swan. I am not qualified to talk about that. I don't really know what's going on. People want the poll, but I just want to see the chat. Let's see here. We've got bullish. We've got bull from Rick. The market seems to forget that inflation is still not 2%, but acting like all that stuff is over. Yeah, because I guess, the narrative here is that you got to remember it's not the inflation component. It's how tight are financial conditions for companies to be able to borrow debt. When you understand the system and you think about it, there are certain pillars of creation. And when you look at the Western societies or any great economic empire, generally speaking, there'll be a debt engine that really is the creation of growth. Like, why are so many of your friends and family potentially millionaires? It's due to usually one of three things. They own a business, they own a ton of stock, or they own their own houses or maybe a couple of houses, and therefore they have millions of dollars in those asset classes. If you actually, now a lot of that is triggered by huge amounts of debt at some point and maybe even still. So I think that's a big thing. All right, so it looks like we've got a good mixture of bulls and bears actually this week. So we've even got some emoji bears, so that's pretty strong there. And that's going to be an interesting one. Yes. Anyway, bulls and bears seems to be about 50-50. Let's go through my opinions. So first up, I will say that I do have my little red stop sign. And that makes me, it makes me think, yeah, well, I can see why. Because, of course, we've had an incredible run. I mean, what an incredible run. Now, down here, And especially here, obviously we were turning on the bull side, and certainly we liked hitting the first zone of our target, which was the weekly 20 moving average, which I've always stood behind. We didn't quite get our 50, which would have been nicer because that would have been a better buying experience. But we have managed to ramp right back up here. And this is a pretty important level. So certainly 5,300 and 5,325 this week hold a lot of big options. And we'll look at that in just a moment. So let's check it out before we go back to this chart. So let's have a look at those options. So here they are. 53.25 on the Monday, which is today. Positive gamma situation. We push through 53.25. We can see that over most of the strikes, 5,400 will become the next kind of gravitation area. However, it really encompasses that we need to go to 53.25 plus, which we know last week was also a key point. You can see it rejected off it. So 53.25 is where the bears, or around here is where the bears kind of sit on the smaller time frames, and we'll look at that in a moment. And if they manage to push it down, we've got a couple of levels that we can be watching. Now, notice we've got an anchored VWAP and a 20 moving average sitting around 5,200, 5,190. So we can now scroll into the smaller time frames and have a look at how this might work. So first up, we have, as I would liken it, this is where the bears sit. And I was going through this in my macro, which I do for our Market Masters Club, 7-day free trial, fxevolution.com if you're interested in following. And I actually broke down the reasoning or the thought process for these levels. Actually, it might have been the day trading masterclass, but anyway, I did it. And I think these are the two main zones. So we've got kind of here, which is where we are right now, is where the bears sit. In my opinion, the most traded level of this area in here. I can see that someone did try to sell off this zone. So I don't really condone too much going against the trend. But for a day trader, they're going to say, well, you know what, we've got a gap. We can push down easily to just underneath 5,300. We've got a call resistance at 53.25. So, there are cases to say that something will hold it down from here and will push towards the 5,300 level. So that's the first case scenario. Now, I actually then have a bull case scenario that sits around here with stops underneath here that then goes long. Now, in this case, there's both a bear and a bull, and they're within a 0.3 variance of each other. So you can actually take both styles of trade and still be very correct, because what that's telling you is that if we get a breakout to the upside, it's probably going to be quite glorious. And if we get a break to the downside, it's probably going to bring a lot more. Because the next stop is in this little demand structure in here, which is 52.50 or even 5,200. So 52, both of those will bring you pretty good risk reward ratios on the down end. Chris has got the bull eyes on. He says, all I heard from Tom's weekend is we could hit 3,400 pretty quickly. Yeah, I think if we get through 53.25, stick it, Nvidia comes in, obviously we're going to ramp pretty heavily. And Nvidia is the ultimate factor here. The today on Monday and Tuesday, we do need to remember we have several bank holidays around the world, not the US, but around the world. And that has been slowing liquidity throughout. And it does mean there is less liquidity into the US session as well. So yeah, quite a lot of stuff there. Yeah, quite a huge amount of central bankers not floating around with their coins and their purses out today. All right, so US 500. Yeah, I think that this area in here holds the bulls. This area here holds the bears, and I could see it doing this very easily. Even see it doing this. This is possible, but yeah, I think those levels will be reacted off. So I'm not surprised to see this market even turn red here this morning. All right. From that point, we go 52.50. And as I mentioned, then like we were in the PPI, patience, react, and predict. PPI gave us an excellent buy. My suggestion would have been to look at this level here, 53.20. This was a 52.20. This was a sweet buy after PPI. So if you had patience and you reacted to PPI, it was actually an excellent, easy trade last week. So yeah, this, if it does come down here, and then probably here, where the anchored VWAP sits. Yeah, trend is up, so you should really still be mostly bullish. That is the way it is. All right, next one. So we've done a little bit of US 500, US 38,000. That did hold. Again, you'd want to be mostly bullish. I'm just getting cautious because a lot of my indicators are starting to show sideways action is coming after such an aggressive move. I mean, we did basically V-shape this component anyway, a 7.7% move in 1, 2, 3, 4, 5, 6, not many days. And if we go back to the US 500 just for a moment, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So it's basically 11 days of bullish action. So pretty strong. Yeah. So 11 days of pretty bullish action, a big movement up, and a new all-time high. It's all on Nvidia's shoulders to continue getting us up, and that will be important. Now, what other action do we have this week? Well, it comes to individual stocks as well. We'll just quickly talk about the elephant in the room, which I've been discussing a lot, which is, of course, the Chinese market. It has been doing very, very nicely for us. A lot of people waking up to seeing this now. Little late for them to get involved, but whatever. We obviously were much earlier. Now it becomes probably worthwhile considering single stocks. So one of the ones that everyone always mentions, I always think it's one of the crappiest ones to look at, is Baba. But Baba did have a excellent Wyckoff base on it recently, which we have liked from the volume perspective. And it hasn't really broken too much. So it's not even really 10% above from this point. So if we believe that's a pretty good base, which I do, then there's a good chance that this was a decent coil. And you can see 2 days of strong Baba action. So it's starting to play catch up. Some other ones, Baidu also starting to break out as well. So if you have a look here at Baidu, kind of like Google, I believe, or something like that in China. You can see that it's got this coiling effect, and we're looking towards the coil being broken, one to watch. Things like Tencent, so my favorite stock in China, that has already blown up big time. And that's the leader. It's kind of like the Nvidia over there. Well, it's not Nvidia, but you know what I mean? Like a very strong stock that everyone likes. Kind of like Apple has been over the years, or a Microsoft, it leads and then the others follow. So, yeah, interesting moves there. Plenty of action, plenty of different Chinese stocks to be looking at. And a lot of them are breaking out with some serious patterns. Like this was JD. So you can see better than the Barber, in my opinion. Beautiful inverse head and shoulders. You can see here my completion target, and it's getting closer and closer to that point. So it's just another one. So still a lot of breakouts happening on the weaker tech stocks. I think it's strongest tech stocks first, weaker tech stocks that are still good second. So still AI plays on those, and then you get the rest of the market that'll pick up there as well. Some people are saying SE is catching up. So SE is probably already running, I'd say. This is not an early one. So this actually was running when we've been talking about HSI, and it broke out big time just a few days ago. So it's on its way to, in my opinion, something like an $85 a stock kind of move. Yeah. So very strong moves there. So the Chinese market's probably more exciting in some ways than the US market at the moment. Though ultimately, we still always love the US market the most because, of course, has the most innovative companies, some of the best companies, but also has some high prices when you compare them to some of the international market kind of positions. All right, next up, let's have a look here at some of the Mag 7 stocks. So we've got one of our new favorite pillars, which is Google. It's just powerhousing, guys. Yeah, Google's really starting to look pretty tasty still. Still underpriced to some of the other big mag stocks. Probably less so now, considering all the rebalancing. But still an incredible move here from this one. So yeah, it's pretty big. Got a good one coming in here from Double One. Says, Tom, do you expect the eventual crash of the US markets to drag down Chinese markets, or have they disconnected? Considering their recession was last year. Yeah, I think they're disconnected. It will bring it down because no market is fully disconnected from the global economy. But obviously, you saw China get crunched while the US and other Western nations weren't. Now, there's two things here. There is a long-term approach, and I will not mince words here. China has a massive demographic problem. I don't see how they overcome it. Maybe AI can do it. I don't believe it can. I think it will end up causing massive, massive disharmony and issues. Okay. If you don't believe me, have a look into the demographics and you will see a huge problem. So, when you're talking 5, 10, 15-year allocations, to me, it's a huge, huge no no in terms of my own opinion. There's a difference, though, between understanding when you've got a position that could go for a year or two or something like that. Now, the next one is, what is the China play? In my opinion, it is the beginning or the kind of beginning of the market realizing that there are AI plays there and they deserve to be valued at higher rates. And that's what I think it is. It is also coming off the bottom of the base, which obviously means that it needs to recover across. Why? Because it's going to the same playbook that the US has and the other Western nations have, which is print the money, make it all go away, deal with it another day. La 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 la. Oh, the house exploded. La la la. We bought it. All good. Now, will that eventually go bad? Of course. It'll be like a second hellhole. But anyway, that's there. Eric says here, are you able to help explain Fed balance sheets and M2 supply and what's the key diverse drivers to the market rally? This depends. Have you liked the video yet, Eric? Have you liked the video yet? So what a loaded question. The one that the macro boys always go on and on about all day long and always talk about it. By the way, guys, would you like me to add in a little bit of a game here we play? Now, of course, streaming has come a long way since we started this, and I know we've got a bit of an old school stream here, but I can do some upgrades to it. And I was thinking of maybe doing a little bit of competition with you guys, especially some of the people that are members and stuff. Maybe we can run like a fun little game each week where we have a race, and the race obviously will just be between people that have super chatted or excuse me, been a member of the community. And I think that would be a bit of fun. So I might chuck that in there for next week. I think it'll be a pretty good one. We need the apes intro, Tom. Yeah, I don't know if I've got that still. The apes intro. That was pretty sweet. All right. So how do we answer this question? Well, it is incredibly complicated, of course, but in general, what you're looking at is the Fed's balance sheet is important to asset increase. So generally, you'll see asset prices being semi-correlated to the Fed's balance sheet. But what I would always liken it to is really, again, it matters about the debt. So if people are convinced that they can borrow or they're allowed to borrow a lot, then in general, you'll see an expanding economy. If they're tightening up the debt, and this goes for mostly retail and businesses, then you'll see a kind of, a tougher economy. So I personally think it really comes back down to that. I think there are powerful forces both ways with the Fed's balance sheet. And although you could easily link it to asset price appreciation, that is, it's how it's seen. I don't know if it's actually fully linked due to what happened in Bank of Japan and all of that stuff. The other one is that you've really just got to remember inflation is caused by the governments. Okay. So the Fed printing money, they could print 50 trillion tomorrow, and it's actually unlikely to cause incredible inflation. And I know you'll be sitting there going, bullshit, but it's probably true. It'll cause a lot of big asset price increases over the longer term, but it probably won't cause inflation. Now, if the government came out and said, here's $17 trillion and gave it to everyone, yeah, that's going to cause hyperinflation for sure. So remember, it needs to be in the system, and then it circulates and becomes 10x and does all of that good stuff. That's kind of a brief rundown, but that's what I would be looking at here. So it'd be a good point. Tuesday live show next week. Central Bank, or one of the holidays, is coming up. I missed the apes intro. I'll see if it's in here. Let me have a look. No, it's not in here anymore. I must have deleted it. It was pretty wild. people that haven't been here for a long time would be like, what is this? What is this stream? Yeah, with the takeoff and the apes, and oh man. That would have been perfect for GameStop last week. But yeah, I have to find it somewhere. Tom, what are your thoughts on silver? I think silver will go to $50 an ounce, and I think it will go up and down all around until it gets there. But yeah. Take a look at the balance sheet. It explains a lot. Yeah. So I have a very good understanding of how I cut through the shit and how it works. But yeah, yep, you could do a lot of things, and you could read into it. But really, just remember the debt creation is a huge pillar, and that's the most important component. M2 supply, again, complicated subject. Is it really worth paying that much attention to? It is, but again, debt creation, it comes back to the same pillar. You got to understand that this is how there are multiple pillars in the economy. But yeah, a lot of it's just there to confuse you. A lot of it's there to confuse you. Welcome to the 700 people joining us. Give it a thumbs up if you enjoy the stream. Just type something in the chat, helps us out as well. Nathan Williams says, and the Fed say inflation is due to people overspending. Well, it is due to that, but it's due why would someone overspend? Because the government injected huge amounts of money and wages went up, so then people spend, and then it doesn't help. Social media doesn't help. I mean, you think about most people in your life. I'll be real. I think some social media is toxic to our mental health, like completely. And what I mean by that is you're probably sick of hearing these things, but I'll just say it right now. Social media attracts you to spend more money. It's partly what it is. Everyone is vying for your time. I'm vying for your time. Watch the show, interact. Please don't leave, guys. That kind of thing. So really, we're all interacting for your time. So what happens is if you see someone on social media that's successful, they've got the Lambos, which they hired, by the way, but they got the Lambos, or they made it some way and they've got nothing else, then you want that Lambo. You want to live their lifestyle, especially if you know that person. And then that encourages you to overspend, and that encourages you to do this and that. It's kind of like a self-fulfilling prophecy. In the last couple of years, we got used to handouts from the government. And because we got used to those things, we live at lifestyle levels that most people can't afford. And I think we're living at a lifestyle level that most people can't afford at the highest rate that we've ever seen. Okay. And it shows in credit card debts, it shows in everything else. But it's actually the pseudo debt that I'm most concerned about. And what that is it's buy now, pay later. Okay. Now, a lot of this you'll notice isn't tracked. So what that means is that these particular companies aren't actually tracked by the government correctly. So there's probably ridiculous amounts of debt that is now starting to plug on those. And I can't really speak for the US, but I can tell you that Australia has a lot of people on these types of systems, which is buy now, pay later, or crypto kind of banks, or some type of other credit card system. Now, that brings us into a stock that I want to discuss today, which is obviously going to be the new credit card system, which is Hood, because they are doing quite a lot of stuff. Social media sells a false lifestyle. I constantly mock them in front of my teens to keep it real. Yeah, you know, there's some teens out there that I've seen on social media that my niece and nephew were watching the other day, and I was like, what is he doing? I said, that guy's a toss-up. He said, no, he's not. And I'm like, yeah, he is. He's a liar. He's for sure a liar. Look at him. He's lying. And it was, he was the worst. Clearly fake. Oh, man, he was bad. All right. So anyway, this is the stock I want to talk about. So Hood comes out with a pretty good earnings, shoots down, ends up creating a pretty negative looking candle, and completely wipes that off with a bull candle this week. So this is pretty sweet. This is actually the type of thing where I think, that was an incredible close last week. I don't know if there's something else going on behind closed doors. Don't really care. The point is the price action looked pretty impressive. So with this price action like this, with what it's done, with the general IPO story that we talk about on these streams all the time, which is an IPO comes out, goes bullish, everyone's an idiot that buys it those first few days, dies for 12 to 18 months, and then comes back. Well, it is in the back end of that. So obviously, I think there's some good growth here. It's a nice close, and I feel like this has probably done a nice little pullback in time. So it could be that actually Hood is moving towards, further recovery. And I could see this stock at $30, $35. Again, my opinion, you need to go and do your own risk management, but I could really see this stock improving. What do you guys think in the chat, though? Do you agree with that? Adam says, I am amazed what I learned about people living above their means. If you count not savings for retirement, are living above your means as well, it's almost everyone in the USA. Yeah, well, guys, oh, look, I feel bad for some of you guys in the USA, honestly. I wouldn't be shopping at those convenience stores, I'll tell you that. Holy. What's with the no prices, guys? When that become a thing in the US? You walk into the convenience. I was honestly amazed when I was there just last year. I was like, this is unbelievably expensive. And I don't really care about the price, but the point is for the general, I always think of it as the general population. And that convenience store doesn't even have the prices on there. Like, where's my price? Like, tell me how much my freaking drink costs so I can buy it for the price that it should be, not go up to the counter. Oh, that's $15. I won't have that. Oh, what do you mean? You poor? No, it's just you're trying to rip me off, you freaking asshole. I don't know how that was even a thing. It was ridiculous. And I'm telling you, I would not go there. They don't even have the price. Is that actually allowed? Anyway, it doesn't exist here in Australia, I'll tell you that much. I live in the US well within my means. Good work, Nicholas. That's awesome. Looks good on the weekly chart. Higher, low setup. Absolutely, Eric. It does look better. Luke says here, Hood just came out in UK, Europe too. Yeah, it's got some good stories with it. In fact, I will read the social media buzz. So we have here. Okay, there's nothing here yet. All right, there's nothing here yet. Robinhood stock. Oh, guys, gets a double upgrade from rebounding retail engagement. Double upgrade, not single, double. Robinhood sees surge in trading as bull market returns. Look at this, another upgrade. Beautiful upgrades. We love upgrades. Robinhood markets to benefit from rebounding retail engagement, Bank of America Securities says. So, thanks to the GameStop saga, Robinhood could also benefit from that. You've got to remember, it's only a few days, but I know already that engagement was through the roof for that particular move. Speaking of which, let's go have a look at GameStop. So it's trading at 20. Excuse me for my voice here today, guys. Yes, it's trading at $20. And we know that's basically a put level for this stock. Now, I don't encourage this type of trading myself because I think it's a gamble or trade. But, people say I don't understand. I say I understand enough to not want to necessarily engage unless you know what you're doing. So, as I said on the weekend video, I could see why it could bounce around this zone of $20 because this is where the puts are. So therefore, it's actually not that profitable to get underneath this point, and it does activate the possibility of calls coming back in. Plus, you got to remember a lot of people were brutalized throughout this. So it's done a pretty good job of stealing from a lot of people. I expect $20 to be a very big battleground for this stock, and almost all of the other stocks are back down to where they started. So it's a pretty big move here on what's happened here. It's Ace Winner says it's truly sad. I got to do this to live. Looking at charts, etc. What a crap life. Ace Winner. No, man. We love candlesticks. Come on, Ace. Come on, Ace. You can't tell me. Is that not a sexy looking candle? Look at that one. Imagine if you Ace, you're in here, $80. Big kahuna puts. Okay. Big kahuna puts. And you see this big red candlestick. Does that sound like a bad life to you, Ace, when you got your big kahuna puts at $80 and this big red candlestick comes in? I think Ace would be pretty excited. What do you guys think? You reckon Ace would be pretty excited? I think Ace would be pretty excited. You must have been in New York, Tom. It wasn't just New York, guys. They don't have the prices on the freaking things. And I was like, my God. If you're talking about New York City, that's just the way to charge non-locals more. Haven't seen it anywhere else. It's a scam. So there you go. New York City probably. They did that there. You're right. No prices listings on items? No way. I think it's dodge. Hershey's, please. We'll have a look at that in a minute. And candles is life. Yeah. Come on, guys. You got to love the candles. Big kahuna drop bears. That's right. The drop bears, they came in. Actually, this is drop bears. The drop bears were here at 80. Anyway, $20. Interesting zone for GameStop this week. All right. So we have some other stocks that you guys want to look through. And one of those Tom was swimming in New York City. That would be fair. When I came into New York City and it was a puddle. It was a puddle. It was actually an ocean when I was there. Let's have a look at Apple. Why? I don't really know. Is there anything here? Okay, let's get off Apple. Let's have a look at Amazon. Do we like Amazon? We like it, but we don't really like the price. Meta. Yeah. Let's go look at something weird and dirty. Intel. Okay. So Intel, what a horror show. What a horror show. But some signs of recovery last week. Now, I can make a case that at least from the first time frame, Intel has tried to turn it up. So maybe that is the temp low. And that Intel is actually starting to increase. So yeah, I think this is a very, very important for Intel, this area here. Break above the 20 moving average, pretty strong level for it, 32. I'm not saying the stock's great, but I am saying the stock needs to put some recovery, and that's a very brutal sell, which is going to be quite in front of quite a few moving averages. So you can see here the weekly super far behind. So mean reversion, nice closure on the weekly as well last week, stopping one of the red candles, first green we've had in a while. You know, the signs of partial bottoming, at least for now. I've always seen prices my whole life, and I have lived in many states. Look, they were scamming me. That's what they were doing. Okay, that's what they were doing. They were coming to Australian guy, that Australian fella. He doesn't know how much this is. Take the prices up, boys. Bang, bang, bang. Press a button, it all flicks off, and then they're like, "Yeah, that's $20 water, buddy." Anyway, that's probably what happened there. Who is beating Intel, Nvidia, or AMD? Everybody. Yes, they can see you from capitalism. That's funny. Matt says hi. Hey, Stu. Hello, Matt. Have we looked at PayPal? Looks like phase B of the Wyckoff. We'll check it out in a moment here. You need to stay away from the shady gas stations. Probably do. That would be true. All right. So Intel, interesting bottom. To me, the beginnings of a potential base down there. So an interesting stock nonetheless. PayPal. Yeah. PayPal. What the hell is this? This is terrible. This weekly candle rejection I do not like, but it's still holding. Is it phase B? You've still got your inverse head and shoulders. You've still got your breakout kind of concept here. So in general, I would say it's still more bullish than bearish, and it still has base properties, but it's just quite slow. In terms of ones that are going to be faster this week, I would expect some of the stocks that have been beaten down to start to play catch up. So that's why I'm looking at that Intel. Somebody mentioned Hershey's before. Obviously, I've been a big fan of Hershey's the last couple of weeks, thanks to cocoa getting crushed. And Hershey's is a beautiful Wyckoff bottom with a very strong run on it. And now it's doing what you call an SOS in Wyckoff, which should be some consolidation into hopefully further ramping. So, yeah, it looks all right. A few people have been messaging me, is ARK coming back? Is it doing well? I don't really think so. To me, like I mentioned on the weekend video, my focus moves to the emerging markets. My focus moves to junior miners, things that I think are more interesting in a higher inflationary environment. Remember, you've got the Fed on one side saying tight conditions. They're not tight, guys. If they're not tight, then that means they can't drop the bloody rates. So therefore, we're sitting in the pseudo middle of ground of nothingness. So we're just going like this. And, copper's leading the way, which tells you inflation's still around. So let's be real. It's unlikely that the only real battleground of what I could see because of political reasons would be oil. So I think that oil won't be the leader of the commodities. I think it's going to be metals and copper and some of those other things. So I double EM. No one cares about this. I do. So I think emerging markets are starting to improve. They are very risky. You've got to be, considering that. There are also some other metals like palladium and stuff that are starting to show some life down at the bottom. So you can see that they've really been beaten down. So a lot of those. Few people want AMD. Let's have a look at AMD. Why do we want this one so much? Good weekly close. I can already see that. God, there's a lot of lines there. What the hell? Looked like one of those memes. Yeah, I like this. Obviously touching with the supply, so we haven't broken that level. Could see some weakness into strength, but in general, probably has base down here for now. Next stop, if it breaks out, 183 on the on that particular stock. It's all right. Strongish trend. Do you think now is good entry to GDXJ? I think the GDXJ depends what type of trader you are. So this is junior gold miners only. Um, I'm a fan of juniors because juniors generally get the funding from the seniors when they need to go and explore and find new weird and wonderful things. So junior gold miner certainly is improving. It's a little bit behind gold stock, but you would have to have a pretty long time horizon. Like I don't think the juniors is just like buy in 1 week later you're in profit. Awesome, that was great trade. I think it's a position, and a position takes longer to play out. 3 months, 6 months, 9 months, 18 months, that kind of time. So a little bit there. Lanny says double EM has a lot of China, Korea, India stocks, largest holding TSMC. Yeah, I understand that. You don't actually need to. I'm just showing emerging markets as a whole. What I would actually be targeting is juniors. Isn't OPEC breaking up? I don't know. PayPal offers buy now. We're 2 minutes off the market open, by the way, so we'll go into that in a second. PayPal offers now buy now, pay later option. I don't know if that's bullish or bearish, though. Probably bullish short term, bearish long term. Hello, welcome to the Quickie Mart. Hello, mate. Attendant pushes the button and hides prices from the Aussie. Yes, that's what happened to me, guys. That's what happened to me, especially in Miami. They hit the prices the most. What about Nvidia? We spoke about it at the beginning of the show quite a few times. Let's have a quick look at natural gas. A few of you mentioned or have been following this. Obviously, the Widowmaker getting a huge push in recent weeks. I got to say, we did it. And what I mean by we did it is we've been following it for a long time. And obviously, we called bottoming features down here at 1.6. It did bottom, and it's since recovered very strongly. It's a very difficult trade, though, because it would have rolled quite a few times. So if you push this out to a weekly, you'll see what I mean. This is the low, very good support low. So how much longer can gas go for? I think probably another, maybe to the 295s. It's on its run now, so it'll probably make it to 295. But yeah, it's gone. If you're in it, great. If you're not, don't worry about it. They don't call it the Widowmaker for nothing. Oh, we got some super chats. Sorry, I didn't miss this. We got Steve Drop Show, new member. Thank you very much, Steve. And we've got Human Hilton, $4.99 super sticker. Thank you very much, Human. If you are still here, big thumbs up. Appreciate your support, Human. Thank you for everything that you've done for the channel. All right, let's get into it. We're 1 minute off the market open this week. Our main kind of discussion points this week are going to be, can oil break the 20 daily moving average? Keep that on your charts. US 500, 53.25, break above, could enter positive gamma. Obviously, Nvidia holds all of the keys. Monday and Tuesday have every single Federal Reserve person you can ever think of having a chat. I wouldn't worry about too much. I just think it was really funny to see them all coming out. And yeah, it is metals from last week. So maybe there's a little bit of continuation there. I tend to think that they've kind of started to blow off a little bit. Watch 180 on Tesla. That'll be an interesting point. And here we go. So we've just taken off. We've entered into the market zone. And we have Nvidia coming out with the strongest move of the mains, 1.32% up. We have Elf, which is kind of like a beauty brand, down 2. Oh, it was down 2. Now it's only down 0.7. And then we have, a lot of red in the mid caps and stuff. We'll bring up a bit of a heat map so you guys can see what actually has been trading. Let's grab a little movement heat map here. I'm going to grab that for you guys. And we'll bring it on the chart. But yeah, I would say this week is going to be another one of those look at individual stocks more than the market indices. Sector rotation will be key, and it could be a good week for energy if we see the right stuff from the energy sector. All right, so let's do the 1 day, and we have most popular sector of the morning, actually metals, followed by semiconductors, followed by gold, and down the bottom we got XLRE, so basically the properties. Yeah, so mostly kind of the metals and the things that we've been discussing most of the time recently. Not really a defensive open market, and yeah, if well, gold obviously has been very good, metals been very good, and semis are just going to be all about that main one, which is Nvidia. Let's load up SMCI as well and see how that's been trading. Super micro. Now you might think, well, this is wild when I first bring this chart up. I was just doing some fibbing. Like to get a bit of fibbing in on the weekends, so we did some fibbing. Yeah, look, the market, as we mentioned, I thought it would hold this zone. It did. It actually found two buys off 772, made new high. It's in a holding pattern. Look, it's good. It broke the downward trend. So if you actually get like a little line out here, you can see that downward trend that was holding a little bit broke through. Consolidation here. Wait for Nvidia. This will be, another one that if Nvidia hits it out of the ballpark, expect SMCI to also go up as well. Deb says market open. Absolutely market open. Thank you. Also, thanks to the over 800 people that were here just before. Appreciate it, guys. QQQ testing the 15-minute 50 now from underneath. Yep. Keep an eye on dollar. Yeah, dollar will be an important daily close. So make sure to watch dollar from the daily close and check out CYN. Okay, let's have a look at CYN. What is this? Synon, whatever. So this stock has been heavily brutalized. Oh, God. Why am I looking at this? My eyes are bleeding. Now I feel like that guy before that doesn't like candles anymore. Oh, no. I don't know. Should I really be looking at this? Looks horrible. I guess you like the volume that came in last week. The big volumes here. I'd probably want to do a bit more research before I pick that thing up. Google beat 52-week high. Google is a beast stock, as we reported on. Over here, we started to really like Google. It's actually done some crazy percentages since then. 27%. Always another opportunity out there, guys. HMY is popping in my portfolio. It's a junior miner. Let's have a look. HMY. It's a gold miner. Okay. 992. Yeah, that's powerful junior. It's that's on the ramp. This one here is okay. It's not near an all-time high, but certainly on the ramp. Nice flag here from this one. So you can see here the flag, long length. Therefore, if it does complete, it's going to be pretty good risk reward. You've been talking a lot about oil, but could it be the case that it's actually forming a bearish flag? Yeah, look, I've been talking a lot about oil because I obviously picked that zone as being a turnaround zone. I have seen some of the signs of turnaround that I would like to see. Could it be, let's say consolidation towards a short? Absolutely, it could. I'm under no illusions that this is a political game field, and oil is the most manipulated. If you said, do I like oil over metals? No way. Metals all day long. No one cares about them, and they're not political. So that's the big one here. Talk about the Russell 2000 looking for a potential breakout, likely setting up for a double top, pullback first, and then break could be likely. Yeah, I agree, Eric. The Russell 2K is prepping better than the rest of the market at the moment. I would probably say it is the stronger candidate over the next kind of 4 to 5 months because there are plenty of companies that need to play catch up in here. Do remember that 37% of businesses don't make any money inside the Russell 2K. So that will also be important. So you got some consolidation, you've obviously got bullish movement. And then you've got, your potential chance of coiling here for a little bit. I'd love to see coiling and then bull breakout. But yeah, look, this will, like, let's say we go 53.25 on the SPY, it breaks on the upside, closes, we push into 5400, then of course I would go for the Russell because the Russell should give you superior percentages. No, politics would not support the upside for oil. It would support the bottom, downing of oil, and then other people. There's a yin yang here. My God, Rich Buddy's back. What's going on, Rich Buddy? How are those paddocks, man? How are the paddocks? Rich doesn't know this, but I actually know. From a long, he'll guess it. He'll guess it. Long time, Rich Buddy. Paddocks and Porsche, if I remember rightly. Big beautiful snowflake says big move expected in snow this week. Yeah, well, snow's got earnings, so that's going to be a huge one. We'll have a look at snowflake for you. Now, I like oh man. Tell you what, it's not bad like in chart, is it? If you were looking at the chart and you didn't know about the earnings, you'd say, damn, that thing's starting to press up towards a breakout of 170, and therefore, really starting to look a lot more positive. But I guess that makes sense. Had an earnings that was green, went bad, and then now it's consolidating at the bottoms. So you're looking towards, your decent strength turnarounds here, but it's all proxy. We need to know what this earnings is. In terms of the move for snow, it's going to be wild. Let me just quickly show you. Snow move is plus minus maybe 11, 12%. Kaiser is doing some serious day trading, doing 5 pips. FX trader for sure. Thoughts on FXI in China? Is this a large cap position? I don't actually own this fund. Was it FXI? Large caps. Yeah, I mean, same as all the other ones. So all the discussion of China doesn't matter whether it's, I'm saying it's a broad-based rally. I'm just targeting the AI stocks. Seems that all stocks and crypto have the same Wyckoff type pattern. I don't know what that means. I mean, yeah, they can have same. Wyckoff works in every market because Wyckoff's a way of creating a large position. So that's why. 13% expected move. Yeah, this is one of the wildest earning seasons I've ever seen. I know you guys are just used to it, but plus minus 10 movements on the biggest companies in the world that are worth trillions of dollars is just wow. That's big. It's the biggest I've ever seen. Other than, big moves. I've seen damn big moves, but to get earnings that are going plus minus 10% average on the $100 billion, on the $1 trillion businesses, that's wild. Pretty sure there are better small caps than the Russell. Of course there are, Matt. But the idea is that, people want the broad base. Are there better small caps? Yes. I mentioned one of them before. I think junior miners are going to do better. That's a small cap. But a lot of people just like the broad base of an index, or they like to bring it back to an index. You know what I mean? Like the US 500, is that the best market index? Maybe. Depends on the timing you're doing it and the type of economy. But, these are what we do analysis on to get the general gist. And then, of course, you want to go and look at sectors and separate stocks as well to pick the ones that are going to give you better advantage. So as we've mentioned over the last 3 months, they have been gold. They have been, at the beginning, it was energy. Then we moved into utilities as well. Then we also moved into China stocks. The point is that you could have gone and picked just one China stock. Let's say you picked 700 Tencent. That'd do pretty good. Gold, do you buy the spot? Do you buy the physical, or do you buy the juniors, or do you buy the gold stocks? So yeah, it was pretty bad. Just some general thoughts. I'll finish up here for this week so I can give you my general thought concepts. First up, I think you guys like general thoughts. Do you like them in the daily videos as well? I would assume you do, but I'll give you synopsis at the end. So my general thoughts are this week, the only thing that matters is Nvidia earnings. Everything else is a joke. And you just look at Nvidia earnings, and that should probably post the way. Secondly, we've got mostly upgrades through Mag 7 stocks. Therefore, the stock market does deserve to be trying to press higher. Yes, okay, you could argue that there are a few warning signs, but not as many as you usually would get in the market. So we have to keep that on the kind of burner. Look for more warning signs for any kind of real potential, let's say, black swan style event. Secondary, we've got in general, I would say, a fairly broad-based asset creation, like asset momentum move, with percentage of stocks above, quite a lot of markets doing quite well. So if we pull here and we just go, I don't know, market strength, let's say, and we'll just use percentage of markets above something like a 200 day, you can see that's been improving. Above 50 day, you can see that's 64, so that's improving, coming off its low, and above like the 20, it's obviously just coming off its above 5 day average. So that just rotated to the top. So in general, broad base is improving quite a lot. So that's good. Now, I would also note one last thing is the American consumer is clearly starting to weaken. Otherwise, we wouldn't see consumer discretionary versus staples start to go down. And what that tells me is I still think we are in late cycle investing. So basically, late cycle investing it's near the end, and it usually means you're about 1 to 2 years away from something pretty nasty. So I think you've got to keep that in the back of your mind. So for now, how do I feel? I feel generally bullish about the market. I think that we have a bunch of expanding things that aren't done correctly, but they're done because the Federal Reserve is claiming tightness that they're not doing. So therefore, we have a generally expanding economy, although that's hard to explain or understand when you look around you. It won't end well, but it is being driven by certain things. And as long as copper is also leading the charge, that is kind of telling you that inflation is still around as well. So therefore, that we're probably not going to be able to get rate cuts. Anyway, some of these things are there. Also watch financials. They have not broken down. So therefore, because if you look at financials, they're still doing pretty well. That is a relatively good sign that the markets are wanting to keep bulling up. So anyway, that's where I kind of feel like it. If you're absolutely terrified of markets, you want to be in your safest kind of havens. That's not bad in late cycle because generally that's going to be your utilities, your metals, your gold, those types of things. So yeah, it's lucky for bears at the moment. It's actually not that difficult because you can hold things that are generally considered bearish hedges. But just remember this, a lot of those aren't as hedgy as you think. When things go bad, gold will fall just like the rest of the things. So that is there. Kaiser says consumer is getting weak. I think that's one of the most important metrics to follow now. Yeah, the consumer is certainly starting to weaken. You can see it in retail sales. The sheet looks like this. So the American consumer is getting weak. The world consumer is getting weak. I have multiple reports here in Australia. Furniture is slowing down. Selling stuff, obviously, a lot more things coming into equilibrium. Watch markets, very low inventory turnover. Prices, obviously, fluctuating and stagnating. Comic collections, cards, they're all kind of just like floating around. Kaiser will end us here to say that a few more months, then people have too much credit cards maxed. I don't think so. I don't think it's months. I think it takes a bit longer than that. The credit card maxing, if you actually look at the delinquencies and stuff, it's not actually, a lot of the stats that you're being shared aren't complete. So if you actually go back pre 2020, you'll notice that we're at record levels, but we're not record levels of delinquencies or whatever you want to say. All right. Very good, guys. Stay safe out there. Make sure you've got your risks in order for the week ahead. And just remember that the biggest thing this week has to be NASDAQ and Nvidia. So that's all you really care about. Nvidia, Wednesday afternoon, plus minus 10, hundreds of billions of dollars at stake. Watch the daily show. Thanks so much for your support. We'll see you next Monday, and we'll add in that extra little bit of fun. All right. Catch everybody. Bye for now.